JJ Kinahan, the TD Ameritrade IMX, which tracks Main Street investor movement, fell 3% in August. And considering all the volatility, all that happened in August, I would have to say that's not that bad.
It's not bad at all, Greg. And one of the things you have to keep in mind is how we measure this index. And what we do is we measure it also, there's a volatility and beta factor weighting to it. What does that really mean? What it means is those stocks that were more likely to be crazy, people may have scaled back on, rotated into some of the things that were a little bit more predictable. And so really I think that's the message. Not that the retail investor has gotten out. The retail investor, just as we've seen many on Wall Street doing with the firms, has cut their risk exposure.
And how do you think that sets up the market for September, October? Because all the traders are back on their desks, everyone's at full strength. So what does that mean heading into the rest of the year?
What I think it primarily means is the Fed is still the big elephant in the room. With China slowing, we saw this sell-off at the end of August in the market and beginning of September. I think it wouldn't surprise me to see people stay a little bit more risk averse as we head into the Fed meeting here in mid-September. And then, what they say after that will have a large impact on what happens. But I think what it does show is that the retail investor, just like the professional, is trying to stay as nimble as possible.
And one thing you're able to see from the IMX and from your readings is that there were net buyers in some media stocks, Disney, Twitter, Netflix. So in August, there were net buyers of those stocks. What can you say as a whole about that group? Because there was a big sell-off in media.
There was, and I think what happened is, that industry got pounded, and a lot of our clients were like, hold on, maybe they do deserve to come down somewhat, but seems like things were a bit overdone. So far, to their credit, they've been right. But a lot of those, you saw Twitter back to its IPO price. You saw Disney really, really get hammered. And so I think people just thought it was a nice opportunity to pick up stocks that they think longer term are still going to be good buys.
And on the flip side, you saw net sellers in names like Citigroup, Delta Airlines, McDonald's. What does this mean for these names? It was a bit more spread out.
It is a bit more spread. So if you look for a common thread there, if I had to find a common thread, I would say it's that a lot of stocks that were off either 3-month highs or 52-week highs. But overall, what I think is that any stock that's enjoyed a nice run where they think that there might be other stocks that are oversold, they would lighten up on the one position in order to finance the other.
And then finally, I want to get a quick mention in here. TD Ameritrade is doing its Thinkorswim back-to-school college challenge for all those collegiate traders out there. So tell me a little bit about that.
Well, thank you. The Thinkorswim Challenge was very successful last year. We hope to expand the program this year, and what it does is it allows college students to compete against one another and use our technology with real-time quotes, et cetera, in order to buy and sell stocks and options. So they really learn how things work, what the relationships are, because we have a larger program called TDAU in which they can use our technology to really learn in the classroom. As you and I both know, one of the most important things to do is to really start learning about this at a younger age so you can be comfortable with this as you do go out and start to make some money and invest.
It'll save you money when you get older, right?
Hopefully so, and hopefully make you a little bit in the process.
Thanks a lot, JJ.
Always a pleasure, buddy. Thank you.
And thank you for watching The Street.